Good morning and welcome to Cafe Mutual YouTube channel. Friends, value research data shows that over the last 1 year, banking and PSU funds have delivered lowest return across all debt fund categories. So, does this hint at attractive opportunity going forward, or it indicate prolonged underperformance of the category? Let's find the answer from the debt expert Pranay Sinha. Pranay is the senior fund manager at Nippon India Mutual Fund. He has over 15 years of experience in generating wealth for investors through fixed income funds. So without wasting time, let me welcome Pranay. Welcome Pranay.
Yeah, hi Nishant. Thanks for having me over and thanks for giving me a chance to speak to your audience.
So Pranay, what is your near-term outlook on debt markets?
The near-term outlook of debt market is that, and I'm sure most of the viewers are aware that we are seeing at the end of rate hike cycle for most of the developed market and emerging market countries and for India also. So just to give you perspective, this rate hike cycle started first quarter of 2022 for most of the countries. For us, it started in May 2022, and for 18 months it has been a one-way street. Now broadly that seems to be coming at end. We seem to have reached the peak terminal rate. Maybe plus minus one can happen broadly. Similarly, in US and Europe, the markets are predicting that at max we can see one more rate hike. So that's what market is thinking, and that's what our feeling is. So that's the state of the debt market currently. In terms of macroeconomic parameters, inflation worldwide has come down from the highs which we saw last year. In terms of commodity prices also, we are lower than what it was last year. So there is some kind of cooling of inflation, which again is going to be beneficial to the debt market.
Okay. So Pranay, as I've mentioned in my introduction, that value research data shows that banking and PSU fund have delivered, return which are far lower than other debt categories. So why this is happening, and what would happen in future pertaining to banking and
So
PSU?
these are
Hmm.
Yeah. So, in last 1 year, as you saw, as we have seen that the long duration funds have done better because 10-year peaked exactly around 1 year ago. 10-year peaked at 760 levels in July last year, mid-July. Similarly, 20-year bonds also went 20-30-year bond also went to 785 levels. So from that level, it has come down. So in a matter of 1 year, you will see that the duration fund would have done better. But this is just one part of cycle. As we have seen across cycles, that the short term and the banking PSU is part of that category. The short term category, which includes the corporate bond category, the banking PSU, and short term, you find that across the cycle they deliver superior returns and superior risk adjusted returns.
Hmm. Talking about overall debt market, so the return, debt funds are delivering better than inflation return over the past 1 year. So why do you think that the rally will continue?
Yeah, so there are a couple of reasons for it. First, as I explained earlier, that we are nearing the end of the rate hike cycle for most of the countries. That means that we are near the peak, and most of the rates across uh, uh, in India and abroad are going to go down. So that would mean that we can get the returns yield, on yield plus any amount of capital gain which we accrue in it. The second reason is that why do we deliver over the inflation return is that post 2014 we had adopted inflation targeting framework, which meant that the real rates have been positive in our economy, which means that there is a greater chance for debt funds to give a return over and above inflation. So these two factors combined would most probably ensure that we would, for the next foreseeable future, give a superior return to inflation.
So Pranay, Nippon India Banking and POC Fund has outperformed its benchmark over 1, 3, and 5 year period. So what are the three things that have contributed to this consistent performance?
So the reason for consistent outperformance is very simple. It's discipline, it's hard work, and it's experience. So where does the discipline comes from? The discipline comes from the fact that we have a fund casing framework, which we have explained. This is a framework which imposes discipline on the fund manager over and above what is prescribed by SEBI. This means that the fund manager has to adhere to certain discipline in terms of duration management, in terms of exposure. While this might seem a constraint in short term, it provides a long term alpha to the fund and stops any negative surprise in this fund. Second, as I said, the hard work. The hard work comes from the analytical team, the team who works very hard to provide right analysis, whether it's the macroeconomic analysis or whether it's the credit analysis for the fund. So this kind of analysis provides the basic framework on which the fund works. The third is experience. This experience is come from the combined experience of the whole investment team, be it from the CIO to the fund managers to the analyst team. So these three simple time-tested methods are the reason for the consistent outperformance of banking and PSU debt fund.
Okay. So Pranay, why the focus is only on banking and PSU debt only?
So this is a SEBI mandated category. What it means is that it provides you a platform where in the short term, now I'm telling you what the practices in the market. It's a framework in which you can get exposure to banking and PSU kind of issuers within mostly a short-term duration kind of framework. What it means for an investor is that since we are talking about banking and PSU exposure, it means that their exposure is mostly very high grade. So this provides a certain amount of credit comfort to the investors. For example, our banking and PSU debt fund is 100% AAA. Similarly, if you see most of the our peers in the group, they also have 100% AAA kind of exposure. So this implicitly, while not explicitly, provides a comfort to the investors that this is a sector which will have a very good amount of credit comfort. While it's not said by SEBI that banking PSU has a duration mandate, but you will observe that most of the duration movement in banking and PSU debt fund for us and for peer happens within a short-term kind of framework. So broadly, what it means is that banking and PSU gives you a good credit comfort in a disciplined duration management space.
Okay. Pranay, the fund has exposure to 94 debt instruments. Don't you think that the portfolio is over diversified?
Just to clarify to the viewers that 94 different security doesn't mean that we have 94 different issuers. Broadly, the issuer range is to the banking and PSU debt issuers. So this would be around 710 banks and 757 kind of PSU exposure. So broadly, the number of issuers would be at around 15, 20, and which is all right for the fund, and it's not over diversified.
Okay. One last question, Pranay. Why should MFDs recommend Nippon India Banking and PSU Fund to their clients?
As I said earlier, this is a fund which has maintained its discipline throughout its journey. It has given regular performance, consistent performance across cycle, and it has given returns which have been decent with a very low amount of walls. So this is a fund which will provide you consistent income across cycles, and this is why we recommend banking PSU fund to our investors.
So, all right, with that, we have come to an end to this interesting session. Thank you so much, Pranay, for your valuable time.
Thank you, Nishant, for having me over, and thank you, viewers, for taking the time out to listen to me.
Finally, I thank each one of you for being such a wonderful audience. Have a lovely day, guys.